Hello, Oracles! What a wonderful surprise yesterday was. Tesla finishing up over 3.5%. Wonderful green day. We got lots of information yesterday in regards to inflation and what the future may bring as far as interest rates and perhaps a recession. So we got the PPI data that came in, that is the Producer Price Index, and that came in higher than expected. So naturally the market sold off a little bit on that news. It was mostly flat, but a little bit red. Understandable because we had gotten the CPI data the day before showing that inflation was perhaps hitting an inflection point. The PPI data coming out as it did kind of gives us a signal that, maybe in the future we are going to see CPI continue to inflate. I know in my business we do construction retail, and we will get continuously emails from our vendors saying that prices are going to be going up. And because their prices are going up, in turn, our prices then go up. And so if our vendors tell us that their prices are going up, let's say in mid-May, we then brace ourselves for that, get our pricing already, so our pricing goes up, their pricing goes up, and then our customers' prices go up. That's just the natural flow of things. And so it seems like that could be the indication going forward. So that in itself is like, ooh, well, that's not a good sign. But then JP Morgan had their earnings, and during their earnings, they came out with some information saying that consumer spending has still risen, and they can see it continuing going up in Q2. So this is a great sign because when we're talking about inflation and we're talking about the soft landing that the Fed is going to try and make, we need consumer spending to continue going forward. It can come down a little bit, but we don't want the bottom to fall out of consumer spending because when that happens, that's when we hit a recession. So it seems like the data that we got from JP Morgan was enough to give the market a signal that they wanted to keep going up, that it was a good signal that they saw that perhaps the Fed is only going to need to raise rates 25 basis points versus 50 come May. And now, of course, this doesn't stop the fact that yes, inflation is still high, so we need to make sure we keep on monitoring that. But when you look at the market and the fact that we still have high inflation, still have the war going on, you look at it sort of like the boy who cried wolf. And yes, usually on the initial reaction to things like high inflation, interest rate information, the market will react and oftentimes overreact to things. But when we continue to get the same data over and over and over again, it kind of softens the blow. You kind of get used to it and you get numb to all of that. So, the Fed can say the same thing. Hey, we're going to raise 50 basis points on our interest rates. And we're like, yeah, we already know that. No big deal. We're not going to concern ourselves with it. That seems to be what is going on in the market right now. That leads to a very manipulated market, which is why we're getting information that would normally send the market red, but instead we went green. And so it's very confusing because we're all over the place and none of it really makes a lot of sense. So we take Tesla, for instance, up over 3.5% yesterday, but it was on very low volume. 18 million shares traded hands, that's very low for Tesla. So, when you have lower volume, it's easier to manipulate. The whole market was green, but how long is this going to last? I don't know. I'm not going to be pessimistic about it. I'm going to enjoy this and look at the future going forward, saying, you know what, with Shanghai being closed now indefinitely, we still think perhaps April 18th, news is potentially coming out maybe mid-May that they're going to reopen. But I think a lot of investors have realized that it's a one-time short-term deal with Shanghai, so it's really only going to affect Q2 of this year, and they're still going to be growing, so it's not really that much. It's more of a hiccup along the way. So that's not enough to bring it down. So we now have earnings going on next week. Sounds like we're probably going to be getting information about the split between earnings and May 2nd. They have to come out with their proxy by May 2nd. So in that time frame, we will get information as to when the annual meeting is so that we can vote on, issuing more shares so that they can do a split. So hopefully we'll get more information on that split as well at that time. So we've got earnings that are probably going to be very good next week. And right now, because the market's being so manipulated, it's hard to tell where we're going to go. And so I try to look at, how does big money play things? Usually they play things 6 months ahead of time. So they'll invest now based on where they think the market's going to be 6 months from now. So if we are looking at prices going up in Tesla's stock now, that tells me that in 6 months from now, they think that the stock is going to be doing well at that point. And now 6 months from now, we are getting ourselves into midterm election time. So I still think we are going to be on this roller coaster ride. We are going to have absolutely zero smooth sailing as far as this year goes. We're probably going to get very similar situations to what we've seen already. We're going to see a long stretch of red. We're going to see a few weeks of green to get us back to where we were. And then we're going to see long stretches of red again, and then some more green. It's going to be kind of a wave like that, and it's going to be a volatile wave along the way. It's not going to be smooth. So where are we in this wave right now? Well, we saw a great green day today. It looks like Tesla has broken the pattern in the downward channel that we are in. So if we have broken that, we will see tomorrow if we can continue going green and follow up from there. As I said yesterday, the rest of this week, I think, is going to determine how the rest of this month plays out. And of course, this year, because of all the volatility, we are accustomed to seeing 2% up one day and then 2% down the next day for absolutely no reasons whatsoever. So this is just the norm for us. So this is why, dollar cost averaging is the best way to go. Unless you are a risk taker and like to do swing trading and options, then by all means have at it. That is not the game I am playing. So I'm dollar cost averaging my way in, and I'm going to continue following the fundamentals, because while the market manipulators and big money can manipulate the stock price, they cannot manipulate the fundamentals of the company. And right now, the only negative catalyst is, as we said, Shanghai being closed. Otherwise, all of the other fundamentals are solid and amazingly growing. So we have the standard range Model Y that is getting released out of Austin with the 4680 structural pack, which is going to have even better pricing power than all of the other vehicles that they have currently. So as we talked about yesterday, pricing power is what is going to be key during all of these times for the next year to year and a half as interest rates are going up. Companies with the best pricing power are going to do the best in this situation. Tesla's fundamentals on their pricing power is increasing. It is getting better over time. This is amazing. And then we're looking at the end of the year, they have the ability to continue raising prices on all of their vehicles if need be, because demand continues to go up. As I said yesterday, with a readjustment in my vehicle on my Model Y, my due date, my delivery date is now January to April of next year. That's insanely long right now, and we're seeing that across the board for pretty much all the vehicles. We're still waiting for the official release of the Model Y standard range, but that's going to most likely be coming out soon. And so that'll have the pricing power, and then they're just building their massive scale this year. Then when we go into next year, as rates are even higher, potential recession, which now seems like it's not as likely based on what JP Morgan said, but it's still potentially on the radar. And if that happens, Tesla's going to have even better pricing power going into next year when they start releasing the Cybertruck. The Cybertruck was going to be an even higher margin vehicle to give them even better pricing power. So even going through all of these difficult times that could get even more difficult, Tesla has better and better pricing power. And then let's also look at how Tesla is investing. And I'm not talking about Elon and Twitter. I'm talking about the company itself reinvesting money into itself. So us as investors, you look at, the inflation is high, interest rates are going up. What is a safe investment to go into right now? Real estate could be a good place to go if you're looking for cash flow generation. And when you look at Tesla, they have a lot of cash. You don't really want to have a lot of cash on hand during a lot of high inflation, because that money loses its value. But I have a feeling Tesla is going to announce at least 2 factories that they are going to be investing in this year. So they can take a lot of these cash reserves that they have and perhaps pick up a little bit of debt if they need to start building new factories. So reinvesting this money into factories being built right now is a great strategy to invest their money, because that is in turn going to produce cash flow in the future. Also, knowing that many other companies out there that are EV companies, legacy auto and startups, do not have these factories getting built and ramped as Tesla is. So this is going to put Tesla even further in the lead. And this is perfect timing because we are coming up to a crucial window where we're transitioning from ICE vehicles to EV vehicles. And what's going to end up happening is we are going to be probably between 2024, maybe earlier now because EV adoption is happening faster, but probably late 2023 through 2026, we're going to have that point where people are going to be making a decision of, are we going to buy ICE? Are we going to buy EVs? Currently, nobody has supply. ICE legacy automotive makers are starting to build up their inventory again, but still, so is Tesla and so are these EV startups, and so are they with their own EVs. So consumers are going to have to make that choice of, do I buy an ICE or do I buy an EV? And that there is going to be whoever can produce the most is going to win the most. Tesla building these new factories, based on my predictions, are going to be producing the most vehicles and have the most to sell. That means that that is going to fill that gap and that little window and that perfect timing so that when we come out of it and everybody has now begun transitioning over to EVs, Tesla will be winning. As Cathie Wood over at ARK said, they will have the lion's share. And when it comes to Cathie Wood and ARK, we are expecting in the next few days their latest model for their price targets for 2026. So it'll be very interesting to see how those come out. We'll discuss them on here when they do, but I have a feeling that is going to be a huge piece of it. They'll probably end up putting the Tesla bot into it, robotaxis, now that Tesla has announced that they're going to have a dedicated robotaxi. That will be another big piece of it to reconfirm their conviction that they had on robotaxis and how much revenue that is going to generate. And so yesterday was a great day in the market. Tesla finished at 1022, which was above the 1017, which was a little bit of a threshold that they had. So it was nice to see them closed over that. RSI is still in the mid 50s, so that is a safe place to be. My only thoughts on it was a low volume day, so I do want to see how today ends up trading, especially considering that it's a short week because tomorrow is Good Friday. So today, being the last day for taxes, I don't think we're going to have much. I think we saw the last of that selling going on Tuesday. So it looks like today being the last day of the week is going to really be a good sign of how are we going to trade for the rest of the month. And we'll find out. And then, of course, next week we've got earnings. So lots of little different key pieces to look at, just wondering how the market manipulators want to play this. But I'm just getting ready. I've got myself 6.5% cash. If we get some great buying opportunities, I'm going to buy myself some more. If we don't and we keep going green, I'm just going to keep on building up my cash because I do feel that we are going to get a pullback. It's just how this year is going to go. We're not going to have a straight bull run going on for quite a while, so I'm just going to be patient, and that is one of the #1 things you can do as a long-term investor. Just be patient. Opportunities will always come along on both sides of the spectrum. You will always get buying opportunities, and you will always get selling opportunities. I'm not a seller myself. I'm actually looking for a better buying opportunity to get some more shares back into my IRA ahead of the split. So for me, not because I want to be pessimistic and not because I'm a bear, but it's because I want to buy more. I'm hoping the stock does pull back one last time before we split so that I can add more in. Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all of the latest Tesla news, pertinent stock market information, and all of my daily trades. Thank you so much. Have a great one.